In this video, I'm going to tell you how the banking system come to exist up to this day. So please watch this video all the way to the end to learn about the history of banking system. Hello everybody, welcome back to my channel. The name is Dan here. Today we're going to be discussing about the history of fractional banking system. So let's get into it. The concept of fractional reserve banking began during the gold trading eras. This took place when people were trading their golds, silvers, coins to goldsmiths. But something amazing happened. The goldsmiths had an idea. There was a light bulb clicked in their head and they come up with this amazing idea that most banks use up to this day. This amazing idea that they came up with is that goldsmiths realized that gold traders would not need their deposits at the time of depositing their gold coins. When traders deposit their metals such as gold and silver coins at goldsmiths, they were given promissory note. I'm sure if any of you know what promissory note is. If you ever had a loan, whether it's a student loan, any kind of bank loan, housing loan or mortgage loan or car loan, you're given a promissory note that you have to sign. So that's exactly what the goldsmiths did with the gold traders. So they're giving them promissory note to sign. The notes that were signed were later accepted as a means of exchange, and holders used these notes at commercial transactions. However, goldsmiths used the deposits and issued them as loans and bills them at higher interest rates, and they also charged storage fees as well. Does that ring a bell? Because they knew that the gold traders would not need all their deposits at the same time. So if you really follow this through and try to understand, this is the same concept that most banks use today up to this day. When you go to deposit your check or you try to cash it out, what do the banks do? Of course, they give you your money or they deposit your check. But later on, when you leave the bank, they charge you a fee. And in fact, they charge you a fee for you having checking account and savings account. They charge you, even though the money that they charge us, we don't really see it physically. Unless you have to do some digging around your checking and savings, then you might see, but most likely we don't really see it. So the same concept that took place in the past exists all the way up to this day. The goldsmiths' behaviors allows them to pay interest and earn interest as bankers instead of guardians of the gold traders' metals. And that's how the beginning of the banking industry was born. And this made the note holders to lose trust at goldsmiths, and they went to withdraw all their silver and gold metals and other deposits that they have with the goldsmiths. And when this happened, the banks did not have enough reserves of gold medals or silver medals to support the mass withdrawals of the traders. Therefore, the banks collapsed and they end up being in insolvency. So why did the banks end up being in insolvency? Well, because they collapsed and they were not able to pay their debt. They're supposed to pay the debt to the gold traders because they misused all their valuable coins. So they must pay back, but they were unable to pay that back. So they went into insolvency. So due to this risk caused to the consumers by the banks, government came up with laws to set up control agency to regulate the banking industry. And I'm sure does this make a lot of sense because a lot of banking industry is highly regulated by the government so that they don't do a lot of wrong stuff, right? Meaning like there's a lot of stuff people don't supposed to do, companies should do and they shouldn't do. They regulate to make sure that they follow the rules and, serve people right so they don't supposed to over-cheat people, okay, or cheat people in general. And because of these banking issues, Sweden was the first country to establish a central bank in 1668. And later, many countries followed in its footsteps. And the central banks were given the power to regulate commercial banks. They can set reserve requirements and act as lenders of last resort to commercial banks that were affected by bank runs. So you might ask yourself, why about this history? Well, it's also good to learn about history because when we learn about history, we don't tend to repeat the mistakes that happened in the past. So it makes us strong so that when we look forward in the future, we make things right and know why things exist the way they exist today. So the same way banking industry or banking system works is the same way it began in the past, where the goldsmiths were using people's valuables and lend them out, and it wasn't their money at all. It was people's money. So today is the same way. So most of the money banks have is everybody's money, not just bank money. If you are interested in learning more about why central banks were given power to regulate commercial banks and to set reserve requirements and act as lenders, you should check out my next video. I'm going to post right here about why you should never keep your money in the bank.